posted for February 1st in the amount of $325. This transaction was posted to the wrong account, and it needs to be reclassed to GL 6290, which is short-term disability. I'm going to use the General Journal to reclass the entry. So let's close out of here and let's navigate to the General Journal. We're going to go to Financial Management, General Ledger, General Journal. The General Journal is used for adjusting journal entries that are posted to the General Ledger accounts and are not project related. There are a few ways you can record the General Journal entries in NAV. I'm going to show you 3 different methods to record the entry, which includes showing you how to set up the journal entry layout. The first method is our one-line entry with balancing account. This method takes the least amount of data entry. However, the one caveat to doing this type of entry is the department number for both the debit and credit amount must be the same. So to set up the journal entry layout, I'm going to right-click in the header of the journal. Click on Choose Columns. From here, a window pops up and gives me the available columns in the journal. I'm going to select the following columns: posting date, document number, account type, account number, description, amount, balancing account type, balancing account number, and department number. As you see here, the columns populated in the manner in which I selected them. So in the account type, we're going to select GL account. Then in the account number, we're going to select the account that we would like to debit. Description, you can make that any description you would like, or you can let the system default to the description that's already set up on the General Ledger. We'll enter in the amount, and then the balancing account type will be General Ledger, or excuse me, GL account, and then the balancing account number will be 6300, since we're going to be reclassing from 6290 to 6300. And then in this case, the department code will be 001. So to recap on how to process a one-line entry with a balancing account, you will have a account type GL with account number 6290. Your balancing account type will be GL account with the balancing account 6300. This first account number here, a good way to think of this is your first account number right here will always be your debit, and then your balancing account number will always be your credit. So the next method is the 2-line entry with debit and credit. There are actually 2 different ways you can enter this type of entry. The first way is to set up your journal entry to include the following columns. So we're going to go back to the journal header, right-click it, choose columns. We'll select the posting date, the document number, the account type, the account number, description, amount, and department. So we can get rid of the balancing account type and the balance account number for the moment. So for the first line, we already have set up account type GL account, account number 6290. We've got our description here, and then we're going to debit this account. Next, we'll follow up with another line. Make it GL account 6300. We'll click F8 to copy the description from above. We'll make this a negative 325 to indicate that it's a credit to the account, department number 001. In this case, you can also reclass to a different department number if you choose. So in this method of the two-line entry with debit and credit, you will have 2 different lines, one in the amount of with a positive amount to debit your account and one with a negative amount to credit your account. The second way you can do this 2-line entry is to include a debit and credit column. So again, if you go to the header, you can right-click, choose columns. In this example, we're going to take out the amount, but we will include debit and credit. And then you see here the journal populates with a debit amount column and a credit amount column. So this makes it easy for users in NAV to be able to see what account is actually going to be debited, which account is actually going to be credited. So from here, let's go ahead and navigate back to our general ledger for 6300, account 6300. Look at the ledger entries here. You'll see here on the posting date of February 1st, which is where we made the adjusting journal entry, we have the original invoice here for $325. We realized this needed to be reclassed to a different GL account. So in the first line that I've got highlighted here, in this line here, you'll see that this journal entry was posted using the one-line entry with balancing account. And the reason is you could tell that is because you have your GL account number, and then over here you have your balancing account number. The next entry here, this was made by the two-line entry with a debit and a credit. You do not have a balancing account number that is visible on this line, but if you were to come up to the ribbon, click on Navigate, GL entry, and click Show, you will see the entry debiting $62.90, crediting $6,300. This concludes the general journal entry. Next, we're going to work in the Job GL journal. We are going to navigate to Project Accounting, Processing, Job GL Journal. The Job GL Journal is used to post project-related journal entries. Such journal entries would include posting a GSA fee to the project. The costs are accrued monthly against the project. You can set up the Job GL Journal with the same format as the General Journal, meaning that you can either post the entry using the one-line entry with balancing account, or you can post using the two-line entry with debit and credit. For my example, I've set up my journal as the one-line entry with balancing account. The account type and the account number refer to the direct GL account that you will be posting to for the project. The balancing account type and the balancing number is the GL amount, and in this case it will be the accrued account. So here I've set up a journal, account type GL, account number, this is the direct GL account number that's associated with the project. I've entered in my job number, my job WBS code, department code. My job quantity is 1. I've entered in the description, accrued monthly GSA fee. Entered in the amount of $33.34. And as soon as you type in $33.34, the job unit price automatically populates with that same amount. Since we're only going to record cost to the project, we can zero out the unit price. And then my balancing account number here is GL 22715, which is my accrued GSA fee account. If you want to post a debit to the job, you'll need to enter a positive job quantity. And if you want to post a credit to the job, you'll enter in a negative job quantity. The job quantity is the multiplier, not the job unit cost or price. Therefore, the cost and price will always be a positive dollar amount. We're going to go ahead and navigate to the job number and take a look at our GSA fee that we just posted. And you'll see here we've got our job ledger entry here showing that it went to GL account 52300, accruing the GSA fee for a cost of $33.34 with a zero price. We're going to go ahead and navigate back to the Job GL Journal. One of the most common errors that we see with posting a Job GL Journal is the subtype must be ODC, or the subtype must be blank or should not be blank. And this error occurs when an indirect GL account number is used in the account number field instead of the direct GL account number. So here I've got an example setup where I've chosen 72060, which is my GNA recruitment account. I've charged it to a job, and I've also chose my balancing account as an accrued account, 22750. When I try to post this, I'm receiving an error message saying that the subtype must not be blank for this particular project. And the reason I'm getting this is because I have a direct job with an indirect account number. If I were to change this to a direct account number, I can post with no problem. So this concludes the Job GL Journal, and next we're going to review the Job Time Journal. We've navigated to Project Accounting, Processing, Job Time Journal. The Job Time Journal is used to post employee timesheets. You can either import timesheets into the journal from WebTime, or you can manually enter the entries. For this example, I already have a Job Time Journal set up for you. So once the Job Time Journal is populated with the current pay period, we calculate labor distribution. And what this does here is that it takes the quantity, multiplies it by the unit cost that is on the resource card to come up with a total cost, and then it also multiplies the quantity by the unit price that is stored on the job card for this particular labor category in Job WBS code. This function will also calculate the billing amount on the job if T&M or CPFF, which I've shown you right here. Next, we're going to talk about corrections on the Job Time Journal. There are two ways that you can post corrections to for the employee's timesheet. The first method would be to use the Get correction entries that's located in the ribbon. You can use this function when the employee has corrected his timesheet through WebTime, and the correction will automatically pull into the Job Time Journal so you can post it. The other method is to manually enter the correction. Best practice is to create a line to remove the incorrect charges and follow it up with the correct charges. So here I've got the posting date, so this is the period that I want to correct. I have manually entered in a document number of pay period ending 03/31/15, and I have indicated a C at the end of it to let me know that I'm making a correction. I've entered in the resource number, the job WBS code, and once I do that, the pay type, time posting group, department, labor category code all populate automatically. You have the option of either leaving the employee's name in the description, or you can change it to anything that you would like. So here I'm going to correct 16 hours that were mistakenly posted to the job. So I'm going to remove the hours or back them out with a negative 16 hours. His unit cost is $41.50, gives me the total cost, and then the unit price, $85 with a line amount of $13.60. Next, I'm going to follow up with the correcting line, again with the same posting date, because I want it all to be posted in the same period. Same document number, and then entered in the resource number. The hours should have been charged to PTO, so I've entered in time posting group equal to paid time off. In the description, I've hit F8, and it copies the line above. Positive 16, unit cost $41.50. There is no unit price since it is PTO. So this right here is a method of being able to post corrections to the job when needed. The next type of entry in the job time journal we're going to go over is the 0-hour adjustments, which are for lump sum amounts. Generally, this is used for if there is a pay rate change and, say, the employee was paid an incorrect rate and there's no impact on the number of hours or the billing, you can enter in a lump sum adjustment, or you can, if you have a health and welfare retro amount the employee should be paid, you can use that. If you have a bonus that you're paying against the job, or not necessarily against the job, but just a bonus in particular you can pay to the employee, you can use the 0-hour adjustment. And what this does is it allows you to enter in a lump sum to pay the employee without having more than a quantity of one or a unit price. So in this instance, my posting date is going to be 4/15/15. I've created my document number to be pay period ending 4/15/15-B to indicate that it's a bonus. I've selected my resource. In this example, I'm going to post the bonus to the job. So I've selected my job number, my job WBS code. 0-hour adjustments, you can only enter in a max quantity of one. The reason being is that when you post this entry, the system automatically follows up with a line to reverse that one out. So that way the employee's timesheet history is always accurate as far as the actual number of hours they've worked. So I'm going to put in my quantity of one with my unit cost of $5,000, total cost $5,000, and then I'm going to put a check mark in the 0-hour adjustment. So once this is posted, we're going to navigate to the job. And look at the ledger entries. And you will see my document number, pay period ending 4/15/15 with the bonus. And you will see here that we've added a quantity one, $5,000 to get the cost on the project, and then we've backed out the -1. So the net effect of quantity equals 0, but the cost is still on the job. And when we look at the resource ledger entries, you will see the 1 being posted to the resource ledger entries, and then you'll see the 1 being backed out, so the net effect is 0. So that way when you run a timesheet history report on this employee, you don't see the quantity 1 included in the hours. We are going to navigate back to the job time journal. We're going to go ahead and clear this out for the moment. The next example I'm going to show you is the TM retro rate adjustments that's located up here in the billing. Let me back up for a moment and go to our job for our example. Now let's look at the resource price. You'll see here a new rate was incorporated on the job March 16, 2015 for the Systems Analyst 1 labor category. When we look at the ledger entries for that time frame, 3/16 to 3/31, you will see that for the Systems Analyst 1 labor category, go ahead and go over here to our filter. You'll see that we posted the price with $65 for that time period. We posted the job time journal without having the increased billing rate in the system yet. So what we need to do now is we need to make correcting entries to back out these hours from the unit price of $65 and put them back in with the unit price of $70 in order to correct our billing. So in order to do that, we're going to go back to the job time journal. We're going to select our default batch. We're going to click on TM retro billing adjustment. And when we do that, we get a box that pops up and asks for the job number. We're going to type in the WBS code. And the filter, the date filter is 3/16 through 3/31, since that's the period we're going to correct. And as soon as you click on OK, you'll see that the system, that NAV automatically generates a job time journal, removing the hours at $65 per hour and adding them back in at $70 per hour. So this is making the billing adjustment for us without having to do any manual calculations. So once this is posted, then you can include these entries in the next billing cycle. That concludes the job time journal. Next, we're going to talk about the job journal. The job journal here, when you go to calculate your fee for the period, the entries are automatically populated in this journal, and then you will post this journal to post your calculated fees. The other time, another instance that you can use this job journal is to record items that are used on a project. You see here I have a journal set up, selected the job and the WBS code, and in this instance I'm going to select item, and then we'll just select the item number and how many of each that I want to post to the job. Next, we're going to talk about the recurring general journal. So we're going to go ahead and navigate to Departments, Financial Management, Financial Management, General Ledger, Periodic Activities, then general ledger, and then recurring general journals. You can use a recurring general journal whenever you have the same type of, or excuse me, the same journal entry that you make on a monthly basis. So for instance, if you have credit card fees that you post every single month, what you can do is you can set up a batch that will allow you to post the same journal entry every single month without having to do additional data entry. So we've got our journal entry here set up. For our recurring method, when you click on the drop-down box, you have options of fixed, variable, balance, reversing, fixed, reversing, variable, reversing, balance. In this, the fixed is going to be the same amount every month. Variable, once you post the, if you select variable, it's because you are posting a different amount every month, but it's the same journal entry. And once you post the journal, the amount zeroes out here, so that way you can enter it in the next period. Balance, that is for when you are making a journal entry to make your net balance in your GL 0. And then you have your reversing, fixed, variable, and balance, which is the same as the first three, except it's going to perform a reversing entry on the beginning of the next accounting period. So one thing you need to do is make sure that your next accounting period is always set up prior to posting a reversing entry. Because if that next accounting period is not set up, the system cannot look ahead to the accounting period. You'll receive an error message saying that the posting dates are not within your range. So in this particular example, I've got recurring method as variable. My recurring frequency, this is 1 day plus 1 month minus 1 day. And what that does is that when I put in my posting date of the last day of the month, this recurring frequency formula will automatically grab the last day of the next month. In my document type, I'm going to leave this blank. For my document number, I've automatically created my document number to be CCC-February 15 for credit card fees. I've selected my account type as bank, since this journal entry is going to deduct the credit card fees from my bank account. My description is monthly credit card fees, and the amount here is $3,000. It's a negative $3,000 because it's going to credit my bank account. Expiration date, you can enter in a date that this entry should no longer, should only post up to. So for instance, say I have an expiration date of 8/31/15. As of 9/30/15, this entry will no longer post if I try to post it. So once I have this line right here set up, I go up to the ribbon, click on allocations, and this right here will tell me, these right here are all of my debit accounts and my associated department. So in this sense, you can either do allocation quantity or you can do allocation percentage. So what I've done here is I'm making a journal entry for $3,000, and I've told NAV to allocate 25% to Department Code 1, 25% to Department Code 2, 15% to Department Code 3, and 35% to Department 610. And you'll see the allocation is made, and it adds up to $3,000. If I were to change this to $2,500 and go back to the allocations, you'll see NAV automatically reallocates the amounts to each department. So now I'm going to post the journal entry. And again, you notice that recurring method is variable. Our posting date is 2/28/15, and we have the recurring frequency of 1 day plus 1 month minus 1 day. So as soon as we post that, you see my posting date has now been updated to March 31st, and this happens because of the recurring frequency, and my amount has zeroed out. If this was a fixed recurring method, the amount would have stayed in there. Other types of recurring general journals you can make are for payables. Say you have, rent that is the same amount every single month, and instead of entering a purchase invoice every month, you can come in here into this journal and create a journal to post the invoice for you. So in this example here, I have 2 different invoices that will post. Both recurring methods are fixed because it's going to be the same amount every month. We've got the recurring frequency of 1 day plus 1 month minus 1 day. My posting date, April 1st. So once we post this, our posting date will automatically update to May 1st. My document type is an invoice, since we're posting an invoice to payables. I have entered in my document number, which will be used as your invoice number. My account type is vendor, and I've selected the vendor that I am going to enter a purchase invoice for. The amount is negative, since it's going to be a credit to payables. You see here I've utilized the expiration date as August 31st, 15, and in this one, 12/31/15. This means that I will not be able to post these entries beyond these dates. So for the first line, when I click on allocations, you will see that I've got a debit going to G&A rent, department code 1, 100% allocation. On the second line, when I click on allocations, I have not set this up yet. So what we're going to do is we are going to click on our account number, and we will find, let's see here. $64,800, which is our dues. We're going to charge this to Department 610. We'll do an allocation quantity of 1, and then you will see the $55 automatically populate. So now I'm ready to post this journal. You will notice that once I posted it, because the recurring method is fixed, my amount stayed the same. My posting date is the only thing that updated for next time. So when we come out of here and we go to the vendor, for Taylor Commercial, you'll see the new invoice that we just posted. And this is ready for payment. Now we're going to move on to the recurring resource journal. So if we navigate to departments, let's see, project accounting, periodic activities, recurring resource journal. This journal can be used for instances where, let's say you have executive management and they do not use web time, and so you enter in the same quantity every period and record the same cost every period. And what you can do is you can navigate to this journal. Recurring method would be the same as what we found in the general journal, but in this case we have an option of fixed or variable. My recurring frequency will be 1 day plus 1 month minus 1 day. Posting date in this case is February 1st. My document number, I'm going to include the date. I've selected my resource number, the department code. In this example, the time posting group is overhead. My quantity of 1, unit cost of $12,500. Since we're not posting to a job that will be billed like T&M for this, we're going to leave the unit price blank. Again, I have the option of putting in an expiration date if needed. And then once we post this, you will see the posting date automatically updates to March 1st. Now let's take a look at the recurring job GL journal. Again, we talked about in the job GL journal accruing our GSA fee. If you have multiple projects that all have a GSA fee that is accrued monthly, we can go ahead and set up the journal. So that way you can just post it every month. Again, we've got the recurring method. You have your different options here. Your recurring frequency, 1 day plus 1 month minus 1 day. Your posting date that will automatically update to the last day of the next month. Got your document number, got your account, so on and so forth. Again, you can utilize your expiration date here. And then when you are on one of your posting lines, click on allocations, and you will see that it's going to credit the accrued GSA fee in the amount of $93.62. So, got a few tips and tricks that we can show you with the journal entries. The first one is we're going to go over to financial management, general ledger, general journal. We're going to go into Excel. We can actually enter in our journal entry into Excel prior to loading it into NAV. And we can use the copy and paste function to do so. Now this will only be for NAV 2013 and higher, but it is definitely a great feature to have. If you've got calculations that may make up your amounts that you're going to debit or credit, you can certainly create a journal entry that will take those amounts and post them into, paste them into your general journal. You do need to make sure that the layout for your journal in NAV, posting date, document number, account type, etc., all matches the layout that is in Excel. So what we're going to do here, is we're going to go to the header, we're going to right-click, choose columns, and in this case we do not want the debit and credit because we are using the balancing account number and the balancing account type. You will see here that I have my department code at the very end of the layout, so I need to make sure that my department code is at the very end of the layout for NAV. Okay, so now that I've got my journal set up exactly the same, what I'm going to do is go back to Excel, and I'm going to copy only the data. I'm not going to copy in the header, since the header already exists in the actual journal. So then I'll do a right-click, copy, come to the very first cell, right-click, and we're going to paste rows. And here we received an error message, so let me discard this and do this again. And it looks like I am missing a field, a column. That's the reason why it's not copying correctly. So I'm going to discard these errors, choose columns, and I'm missing my amount. So I'm going to add that in, going to move that up, as I believe my amount is there. So now I'm going to recopy this and attempt to paste it. Let's delete that. And let's see, the balancing account number and type. Got those in the wrong order. There we go. And now you see this copied and pasted into Excel. And just in my description in Excel, you'll see that I just made a note of copy paste into Excel, so that way you can see that the actual description is what pasted into Excel, into nav for me, to copy paste into Excel. This journal entry is ready to go. The next tip and trick that I have for you is that let's clear this out real quick. And we have what's called Get Standard Journal Entries. So what we can do is let's go ahead and paste this back in for a moment. Let's do a Save As Standard Journal. We're going to go ahead and click on the drop-down box for the code. We're going to create a new. We'll just call it 401k. And click OK. And then click OK again. So let's go ahead and delete this out here. And so once we save a standard journal, then we can click on Get Standard Journal. And we'll go ahead and pull in 401k match. Click OK. And you will see that what the format that I had saved previously along with the amounts is now populated. So you can also use this as an alternative to using the recurring general journal entry. So this concludes our demonstration on journals and when to use the journals. We do have another webinar coming up on May 27th, which will include going over Role Tailor Client as well as other tips and tricks within NAV. So now we can open the forum to, if anybody has any questions, we would be happy to answer them.
See, there was one question from somebody who, where we had said, is there a way to copy and post the journal entries? And I think that's what Robin showed you, because it's a standard amount. You either do recurring entry or the Get Standard Journals, or like a monthly amortization expense. Another question was on the job time journal. What are the best practices for doing a correction? Should you do it by day, or can you adjust an entire pay period? That is purely up to you from an operational perspective. If you are moving time, yes, it is fine to move the entire pay period, but what level of information are you going to need on your project reports, how you're going to bill it? Many people just will move an entire pay period. So from a NAV perspective, either way is fine. It's assess what the impact is on your billing or your reports. Another question on the recurring journal entries was, do they automatically post every month? And no. The recurring journal entries don't automatically post. You will have to go in and initiate that action. It will increment the posting date on the recurring entry, but they will not automatically post. The question was copy and paste on certain versions of NAV, And I believe Robin did kind of address that from the standpoint of the copy and paste functionality is only available in NAV 2013 and higher. Yes, prior versions allowed you to copy, but there was no paste function inside the journal entries. That's one thing that we were very excited about when Microsoft introduced that in 2013. One of the concepts of that, the questions was, how do you handle retro pay in your job time journal? Again, if it's just retro pay that you're going to do from a costing perspective, Robin showed you the 0-hour adjustment. However, if you need to record retro pay for your cost-plus contracts, again, that's, you're going to want to reverse out the old pay and re-record it at the new pay rate because your cost is your price, and that's the basis for all of your fee applications and rates. So what we're going to do is we actually will be providing a recording of this webinar. It'll be posted to the website along with any information that we can send. And if we didn't address your question, we're going to go through the questions again and either follow up with you individually or post a frequently asked question on our website so that you'll have, so maybe everybody can benefit from those questions. At this point, I want to say thank you for joining our webinar. Hopefully, Webinar Wednesday is working for everyone, and we'll all continue to learn together. Thank you, and we'll see you guys again in May.
Thank you.